Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Dennis Dick, and we have Ezra Rapoport on the line. He's the trader and head of automated strategy and development for Flammarion Capital. Ezra, are you excited for this quad witch today?
Yeah, I got happy quad witch. It's going to be good. Watching,
Ezra, we've been arguing here for the last year that I want to like start some type of thing to make it called triple witch here, because does anybody trade these stock index futures? Do you trade these?
Single stock
Futures.
I don't. I think they've got to be very thinly traded. I don't know who trades them.
Changed it from triple witch to quadruple witch just for the single stock futures. This is like my pet peeve here.
Right.
So
I was thinking about that myself this morning.
Yeah, see, you're even thinking about that. Who trades these single stock futures? We're trying to find somebody, actually. If you know somebody, have them tweet at us or something, because I want to find out if anybody trades these single stock futures. And if they don't, I want to change it back to triple witch.
All right. Start a campaign.
Dennis is on a roll today, so bear with.
Gonna start a petition.
Yeah, but Ezra, before we dig into some of the particulars of trading, I mean, you're a high frequency trader, and like when you were a little kid growing up, and people said, what do you want to be when you grow up? You didn't say I want to be a high. You're a smart guy. You probably wanted to be a doctor or a lawyer or a scientist like that or something. But you're a high frequency trader. Could you just tell us how that came about?
Sure, no question. And I think, to be fair, it might be in keeping with my childhood aspirations. I'm pretty sure I probably wanted to be an inventor or something like that. I see high frequency trading as pretty creative and cutting edge technologically. But yeah, I didn't start out in markets. I actually started out wanting to steer away from markets. I was studied engineering, and I went into I saw a lot of engineering, students got, funneled into finance, and, basically I had the ambition to steer away from that. And I went into, automation, industrial automation, basically. And I got into, trading because there was a push in trading toward automation, few years ago, and basically I got into finance and trading from that angle, because of my automations expertise, and I ended up learning markets and trading from a shop in Chicago that brought me on, but they were seeking my automations capabilities, and so yeah, I don't know what a standard path to HFT would be, but I think mine is highly non-standard.
So what do you exactly trade? Usually just the futures, or what are you primarily trading there, Ezra?
Most of my volume is in Treasury futures. We're expanding now into other asset classes. But yeah, we are all in futures and commodities markets.
Single stock futures?
What are your thoughts? I remember some people talking about those, in Chicago when I was starting out. But that was, when automated trading was just the Wild West. I think people were looking for all kinds, anything to trade. And I remember people talking maybe about like IBM futures or something, but really I can't think of anything specific.
Do you take heat at all being a high frequency trader? Do you have like people from the media or anybody, give you heat, because obviously high frequency trading's got a really bad rap, especially after the book Flash Boys there. Do you get any heat ever from, other traders, saying, why are you doing this? Or do you feel like that that's buzz around high frequency trading is starting to go away anyways?
I feel like, definitely, there's definitely some strange stigma, and I think it's born of misunderstanding. I think the more educated people are about markets, I don't take heat from traders. The more educated people are about markets, the more, I think balanced they are about, trading in high frequencies. I think it's people who are less informed who tend to be more, judgmental, or at least initially, conservative about it. But I definitely find myself having to be a standard bearer a little bit for the for the industry, just because there's so much misinformation and people come to me with so many questions, regularly.
Do you follow Modern Markets? Do you feel like their initiative there is kind of true about high frequency trading? Because they've come out to obviously defend the high frequency trading industry, and a lot of stuff they say, very relevant, very informative there. Do you follow them, and do you agree with kind of what the Modern Markets initiative to educate the market better on high frequency trading?
I like the idea. It totally makes sense to me that, that a lobbyist group would emerge, when regulatory risk is the primary risk, I think, to a lot of these business models, which operate on, very, very tight margins. Regulatory changes can drastically interfere. And I think when you have an industry like that, it's natural that those, the business interests are going to be protected in a number of ways, and one of them is going to be through trying to influence lawmakers and public opinion. And so, yeah, it makes total sense that the Modern Markets Initiative exists. I think we'll probably see, probably another one or two of those lobbyist efforts emerge. And, I think it's good. I think that as long as, they just stay informative, I think that they can, they can contribute to the dialogue.
Obviously, one of the biggest risks here with high frequency trading is regulation that you just talked about there. And you look at like a stock like Virtue and that, and you can say, well, maybe we should invest in that. What are your thoughts here on the regulatory environment here? Because obviously after Flash Boys, I think everybody was concerned that the regulators might come in and start to do some funny stuff, which maybe it's not going to be bad for the overall industry here. But are you like fearful of regulation on this industry here, or do you think the regulators kind of have a pretty good grasp and understanding of of the overall market structure and aren't going to do anything too drastic?
I think that regulators will regulate. That is what they do. So we can expect that to happen. And I think that, I basically, I have enough faith in the robustness of just the market system that's in place. I think that, markets, capitalism will flow around whatever regulation is in path. I think that, there will always be a place for market makers. We will have to adjust always when new regulations, just like, when new exchanges or new products come about, and I think that, it's just a real consequence of, being in the industry. It's just following the regulation and just, staying on top of it.
Can you explain market making just for some of our listeners? We talk about it all the time here. Can you just explain, how a high frequency trader makes markets as opposed to like how maybe a human being did it on the floor years ago?
Sure. I think that, basically, I would say, there's probably a big difference in the capitalization of market makers, electronic market makers versus, floor traders making markets. But obviously, what making markets is quoting bids and offers in the same, instrument and hoping to profit off of the spread between people who are buying your offers and hitting your bids. And so basically what, I think that all of the market making that I perform is born of standard market making protocols that, I learned from former floor traders. So, basically, it's all the same at heart to what the traders are doing on the floor. It's just what being electronic allows us to do is access as many markets as possible. We, like Virtue, want to be in as many markets as we can access electronically, as many endpoints as we can access. Basically applying the basic market making protocols and procedures, but just scaling beyond what any human would be able to do. In terms of the simultaneous and the information flow and speed.
Ezra, I just got a question for you, and just maybe a point to make. I mean, commission structure. I mean, that really that's the key to what you're doing with the amount of trades that you do. And this is, if you're going to get into this kind of trading, I mean, commissions are are a huge part of the game, right? I mean, as far as I don't know what they are, but a percentage of your profits. But unless you have just an extremely low commission structure, I mean, this is just it's just not feasible, right? If you were even paying a buck more a trade, how much difference would your performance be?
Absolutely. Absolutely. I measure my performance in, profitability per contract basis. Our margins are very tight, and a big part of the game is what we can do to alter our fee structure. Fees are everything. Fees can absolutely, can absolutely sink an operation, or make certain markets, make it unfeasible to make markets in certain places. Absolutely. So yeah, we couldn't possibly do the kind of thing that we do, on any kind of retail structure. It has to be, good part of the business model is optimization of those fees, finding partners who can lower our fee structure. Conversations with clearing entities and that kind of thing. Absolutely, that's a good part of the effort, 100%.
As they're being as automated as you are, do you pay attention to any of the macros, any of the fundamentals, or is it, do you pay attention to the Fed and do you adjust your algorithms, based on a bias, or do you just trade, and just let the automation do what it's supposed to do and just kind of ignore all of the overall noise of the macro environment?
I try to stay personally very current on the news because my markets are highly news sensitive. But basically, I'm interested in it because it causes, it creates two-way market action for me. But there's no macro bias in anything that I do. Really, there's, like I said, we need to be aware for event risk. But besides that, there's no macro direction or alpha on my desk.
We're on the line with Ezra Rapoport. He's a trader and head of automated strategy and development for Flammarion Capital. One more question for you, Ezra. You do these strategies and you're in the markets. Do you ever get the sense that someone is piggybacking off your strategy or running a similar strategy? And, another thing, just along these lines, you're always creating new strategies, right? Because of, there's just diminishing returns of doing the same strategy, looking for different things. Can something's really profitable for a while and then, you get company. Do you ever get that sense?
Absolutely. Absolutely. And so you have to constantly be, be advancing your technology, be advancing your strategies. There's definitely a case where, with certain markets, it's obvious to see that there's, 4 or 5 other entities making markets in the same, in the same market. Just because you can't see them, if you were in the pit and you were blindfolded, you'd be able to hear them. You'd know how many other people there were. In certain markets, it's very obvious. You as a participant in the market, you can who else is out there. You just have to. You've made markets for, enough years. You can just tell by the way the market moves, by the quoting behavior. You can see who else is out there. And, I think basically we're always scaling in strategies, technology, endpoints. And, this is part of the game is constantly, constantly moving and scaling.
Great information from Ezra Rapoport, trader and head of automated strategy and development for Flammarion Capital. Ezra, a pleasure as always, and hope to speak to you again soon.
Look forward to it. Thank you, guys.
Thanks, Ezra.